So even though we've changed depreciation methods from straight line to reducing balance, the way we process it is exactly the same. So we're going to need a depreciation ledger, which is an expense. So it goes up on the debit side and then down on the credit side. And we're going to need an accumulated depreciation account, which is a negative asset. So it goes up on the credit side and down on the debit side. So straight line depreciation, if we charge say $2,000 each year, well, we did a debit to depreciation in year one, and then accumulated depreciation was a credit. Year two, we charged $2,000 more of depreciation. Well, remember we reset our depreciation ledger back to zero. So going back to unit three, and then we charge another $2,000 in 2016, and then that accumulates with the accumulated depreciation. We'll reset it back to zero, and then in year three, we'll charge $2,000 of depreciation in 2017, and that just accumulates in the accumulated depreciation account. And reducing balance is going to be the same. All that's going to be different is the amount. So in year one, we had depreciation, say, of $2,200, so we did a debit to the expense, credit to accumulated depreciation. Year two, we're just going to charge less depreciation. Now we've gone and reset our depreciation ledger to zero to calculate our profit, but then we're just going to do another debit for 2016. This time it's $1,900, and that'll still accumulate. It'll just accumulate at a slower rate as it gets older. Reset it to zero, and then in 2017 we charged $1,500, so we did a debit for the expense, and then that pulled in the accumulated depreciation account. So no different there at all. And we'll do it in the general journal just like we did in unit 3. So we did a debit to depreciation of $2,000, say, for example, and then we did a credit to accumulated depreciation, and then we had a narration. So just looking at our narration, remember when we're writing the names of the accounts, you want a separate depreciation ledger for each type of asset. So we never just write depreciation. We write depreciation of vehicle, depreciation of computer, depreciation of furniture, and so on. And the same applies for accumulated depreciation. So just matching up our references. Just without a narration, if we ever get asked, we want to give as much detail as we can. So the type of asset, so it's a vehicle, how long it's depreciated for, did we own the asset for the whole year, or maybe it was just 6 months, 8 months, 10 months. So in this case we've said 12. The method that we've used, so we've used reducing balance here, and then most importantly we need that memo number.